Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Wednesday, the 26th of October. Hey, don't miss our MarketClub TV right here tonight at 5 p.m. You can email us with your questions at marketclubtv@ino.com, or you can call us at the number on the screen, 410-867-2100, extension 129, and leave a message, and we'll try to get that on the show tonight. Okay, it's Wednesday. Do you know which way the market is headed? Do you know what's going to happen to Europe? Europe is unbelievable. They had fistfights today in the Italian parliament. But more important than that was Angela Merkel was hinting at the possibility of war. That's a word we have not heard in Europe for over 50 years. It's amazing that this word should even come out. So lastly, what is gold telling us? Do you keep waking up thinking there's going to be a resolution to the crisis that continues to fester and grow in Europe? If you do, you're not alone, as everyone is pondering if the European problem is ever going to be fixed. I, for one, don't believe it is going to be fixed. Now we hear that Italy is going to up the retirement age from 65 to 67. But this is the kicker. It only goes into effect in 2026, 15 years from now. Who are they kidding? And if you think Greece was bad, Italy is going to be just another big disaster waiting to happen. Then we have Spain, Ireland, and who knows who else is going to collapse under the weight of debt. These are interesting times, and don't get down on this, but they also lend themselves really well to making money. If you're watching the markets now nimble in your choice of markets to trade, both from the long and short side, you will do very well. Don't forget to watch tonight, Market Club TV. It is a 1-hour show. We go live at 5. That's Eastern Standard Time. If you can't make that time, we rebroadcast the show throughout the day on demand. That gives you the option of watching it when you have time. Be sure to watch tonight's show, as there's some pretty interesting market action taking place right now. We'll cover all of that in tonight's show, so stay tuned for that. Now let's go to the charts and see how we can create and maintain your wealth in 2011. So don't forget, give us a call, 410-867-2100, extension 129. It's an automatic answer. Just leave a message and we'll transcode it and hopefully get it on the air tonight. So let's go to the markets. And here we are. We're looking at the markets as always. And this was very interesting action yesterday in the S&P 500 index. And what I want to show you is this level right here, this big down day. That's not a good sign. And unlike everything else, it came from a Fibonacci retracement level. We'll cover this out a little bit further. But if I draw the Fibonacci lines in here, which I can do, you click on the Fibonacci tool, it puts a left-hand corner, a little yellow box, and we just simply draw from this high point. And goes down there, and you can see we hit that Fibonacci exactly right on the money. Big reversal. We talked about that yesterday in our report. The market's currently down about just a little bit, 0.16%. And I think if we close lower, and I certainly think if we close below this level here, and that's basically right around the 120 level. If we close below 120, this market's going to look very heavy and possibly trade down to, and let me just give you an idea where we think at least we could see this market pull down, back down to the 1144 area, or the 1150 area. Certainly we could see the market come down there quite easily. This is what I'm thinking. I think the market's going to be negative until the end of November. They keep putting off this European problem, and the longer it goes on, the more concern market participants will have in holding long positions, in my opinion. Our long-term trade triangles, which we've talked about before, remain negative. Only the short term and intermediate term are positive, and I'm looking for those markets to turn around and get negative gain and have another push down to test the lows. So let's go to our next market. Next market is going to be silver. And silver, this is the problem with silver right now, in my opinion. Is it an industrial metal or is it a valued precious metal? And I think really right now, if we see the equity markets head lower, I think silver is going to be viewed as an industrial metal. They've sucked people into this before. They did it in the 80s when they took silver way up to $50 an ounce, trying to corner the market. They pushed it back down. There's tons of silver everywhere. I mean, just everywhere. It's not a precious metal. It's more like an industrial metal like copper. So I think if the equity markets go down, then we'll see this market still remain under pressure. Longer term, now this is the important thing to look at. We're going to make a complete distinction here between gold and silver. It's an important one. Silver, long-term monthly trade triangle, negative, and that's not a good sign. And I think we'll still see this market choppy, but there's no reason to be parking your money in something that's like this right now, in my opinion. So let's go to our next market, which is gold. And right away, you'll see a different picture. Green arrows, green triangles rather, all positive, indicating higher levels. Now, we were looking for gold to go higher, and we're looking, because all of our trade triangles are positive, as we said, and we're looking for the market to hit the 1724 area, which it hit today. That's a 50% target on the Fibonacci numbers, and also the 1770 level, which is a 61.8% target. So if we take our Fibonacci tool, which we already have on the screen, click here, drag down to here, there's the 1770 level we talked about. I think there's a good chance we'll see this level hit, which is another $50 approximately from where we are right now, and possibly test the 1800 level. So I think gold continues to be a different picture. It's right now telling you that things in Europe are not good, and people are concerned about this debt and concerned about these markets in general. I think you're going to see the equity markets move lower. I think you're going to see the bank stocks move lower, and I think you're probably going to see the precious metals go higher, all until the end of the month, end of November. That's the end of November. So let's see how that plays out, but that's how we're seeing this market right now. So let's go to our next market. In the next market, it's crude oil. We were quite frankly a little bit surprised at how much this moved up. However, it did not change our long-term monthly trade triangle from 95.79. Market's currently trading at 91.25. It traded as high yesterday as 94.65. Didn't quite get to the levels we thought, but we thought between 95 and 100, this market would have problems, and that's this reversal today, the closing down here. If we see this market close down again, we may be a little bit choppy action, but generally speaking, there's a lot of concern about this, because if the economy slows down, if we go into a double dip recession, things in Europe don't work out, then I can't imagine why oil will be in that big a demand to push it higher. So let's go to our next market. Our next market is going to be the dollar index. And we've been talking about this for some time. We felt the dollar was undervalued at 76, which is the original breakout point. And look at today's action. We're currently trading at 76.50. We've rallied up from the support level we talked about. This is a doji line, which means there's a complete balance between sellers and buyers. And of course, today's action, we opened lower, rallied back dramatically, and we put in a daily trade triangle. Now, that's not to say everything's hunky-dory, but the longer-term picture is higher. And if we see this market continue the way it's going, the dollar is going to be the last refuge for anyone to go into. And I think that's something very, very important to look at. So again, I think for the moment, we've seen this market at least bottom out. Now, this is the dollar index. This is not against the euro. The euro is involved in the basket of currencies here, but it's really something that you really want to watch very, very carefully. But generally speaking, I think we could probably draw a very simple trend line from the highs here just down. You can see basically it's broken out. Close here at 76.50 indicates we'll have a test of the 78.50 area on the upside. Lots of stuff going on. Really, really pay attention to the markets, because this is an opportunity that you won't see that many times in your lifetime. So let's go to our next market. In the next market we're looking at is going to be the CRB Reuters Jefferies Index, Commodity Index, and I'm going to put the candlestick charts. Again, this sort of got up to an area we expected it to go, have resistance somewhere around here. It's a Fibonacci level again, but the market actually came back, and it's sort of chomping around. The fib number we're looking at is 323.12. Didn't get there. I think the high we saw in this market was 321.62, but very close. Certainly, we've closed the gap that was here. And if oil goes down, then this index is going to go down. It's that simple. It's been pretty much tracking the oil market. and oil has been pretty much tracking the equity market. So this kind of like they're all connected in a sort of universe, in a very loose universe, and they connect and disconnect at will. So again, the longer term trend for this market continues to be negative. You can see that the monthly trade triangle is negative, and also the interim are positive. So a little bit of a conflict there, but nonetheless, it's a plus 60. And one of the things we like to do, and I'll show you this, we didn't do it on most of the other charts, we will do it later in tonight's show, but you can see basically when we have we put the Donchian trade channels, and this is the thing to look at. When it moves out of the channel, it tends to move back in, and we moved out of the channel here, and we're moving back in. I could see we could seriously go back to the 305 level without too much of a problem there. So I think that's the thing to really, really look at. And as we're speaking, the markets are coming under pressure again. I think we'll see these markets really be quite a bit lower for the week. Unless there's some magnificent solution to Europe, I think we're going to be under pressure here. So let's look at some other markets we have in our portfolio. We looked at Citigroup. Citigroup looks a little bit shaky. The SKF, which we've had a lot of requests for, is a ETF. It's a leveraged ETF. And this is acting kind of interesting in an interesting fashion. We're currently trading around 66, 67. It's a little bit below here. I would say if we go over yesterday's high and close over 67.15, I think this market has put in a bottom, and we can see a rally back to certainly the 75, 78 level, not too far from there. The other thing that we're looking at in this particular index is cyclicality, and the cyclicality indicates this SKF, this particular ETF, should be going higher until the end of November. And we can put our Fibonacci numbers in, and you can see quite quickly where you could see this market. You can see it trading back over the 80 level, which is a great move from where we are currently. So let's see how that plays out, and let's go to look at another market that we're looking at. And let's just take a look at Citigroup, because Citigroup has had a really good recovery here. It's down today. It's under a lot of pressure. The low is 30.31. And let's just bring that chart up. Excuse me. And Citigroup is basically, they try, as I say, it's right at the top of the Donchian trade channel. We've had an outside day already today in this market. I would say if we close below this level here, the level I'm looking at is 29.69. We're currently trading around quite a bit higher than that, but if we close below that level, I think this market could come under pressure and certainly get down to these lower levels. And one only has to draw, as we do quite often on the show, we're going to just draw our Fibonacci numbers, and this is what they tell us. If we go down to these levels, we could be looking at the 25.60 levels of 61.8% retracement. Hey, lots going on. It's going to be really interesting to see how these markets close. These markets close tonight, so stay tuned. Watch our show tonight at 5 o'clock. It's live. Your questions will be answered. If you have any questions about the markets or any particular ETFs or stocks or futures, we'll be doing our very, very best to alert you to those things and to give you an update on what's going on. So, hey, this is Adam Hewison. Thanks for taking the time to listen to our show today, and be sure to check our show out tonight at 5 o'clock, and I think you'll be glad you did. So, hey, interesting markets, interesting times in Europe, and lots of opportunity to make money. So, I'm Adam Hewison for Market Club TV. I'll see you tomorrow at 1 o'clock, of course, and I'll see you tonight at 5.